What's up, fellow traders? Hope you all having an awesome day. And sorry for the late video, as I have a long 7 hours drive to another city and internet is really shit here. So starting with natural gas first, what do we have right here? So as you can see, we have an aggressive entry triggered right here with this 50% retracement as mentioned in my last video. But let me show you what I've said in my last video so that you can understand conditions and entries. For Fibonacci tool, if we are using that, we can use this low of the candle until the zone above. In that case, if we have a 50% retracement, that is your sell limit order, and 1.618 retracement will be your take profit too. Nice one. So with all the rules are met here with the Fibonacci aggressive entry, if you're my student, you know all the rules are met here. With that, we had an aggressive entry triggered and our take profit of 1 ATR has been hit. That is actually more than 1 ATR. If you look here from 50% retracement till the low, it is more than 1 ATR. If you hover over this candle, the entry candle right here is 4 and 2 ATR is 8. So price has hit nicely more than 2 ATR. Now at this point, the aggressive entry has played out nicely. And what to expect from here? So at this point, we have a price just made a new low. Now at this point, if you're managing this trade, you can manage it till 1.618 retracement is totally up to you, or exit your trades right here as your 2 ATR target has been hit and look for another entry condition, which is something, a new low which we already have. So let another candle close below this candle, and after that let the price to pull back of few green candles followed by bearish engulfing pattern. So all I'm looking at a pullback entry, looking at the fact price has just made a new low with the pullback entry followed by bearish engulfers till the price is in the area of value right here in green is 1.545, that goes to 1.676. So till then, all we are looking at conditions. If we have conditions, only then we're going to enter the trade, which is a new low, a pullback, bearish engulfers, and then a new low, a pullback, bearish engulfers, and keep on taking shots with these type of conditions. If there is no conditions, we are not going to enter the trade. Without reasons, we are not taking any trades. Now if we have a retest of the zone above that is recently broken right here, 2.110, that goes to 2.252 with the retest, a condition like double top, in that case I will still go short. If we have a pullback, let's say we have a big pullback below 50 EMA, hit of 50 EMA with a bearish engulfers, we're gonna go short in that case. So all I'm looking at a bearish trade from this area or below 50 EMA with a pullback entry, and once the price pushes lower, all I'm looking at a pullback entry bearish. Doesn't matter where it happens, must be below 50 EMA, and keep on taking shots till we get a condition to enter a trade, until the price gets to my level here from where we're going to enter our buy trades with bullish engulfers, double bottoms, hammer candles, 382 candle bullish. Now here on Rwanda, price is still pushing down and now getting closer to the level of major area of value. Price is pushed up, hit the buffer zone with a wick, and now price is pushing lower. So at this point, suggest your fib tool, because from this low to the zone which is right here, and now price is pushing lower from the hit of 50% retracement, and at this point price has just made a new low. So exactly the same as capital.com, a pullback, bearish engulfers, you can keep on taking shots till we are in the zone below, which I've mentioned right here, a major area of value which is 1.959, that goes to 2.059 from where we're going to enter our buy trades with the conditions I've just mentioned. Keep looking for sell trades only if you have a good push up, hit of the zone above right here, 2.395, that goes to 2.475. If you have a push up to this level and the price forms a bearish engulfers or double top entry pattern, in that case I'm gonna go short. So remember, buy trades will be only from the zone here, or if you have a dramatic push up and the price close above 50 EMA, only then I'll start to look for my bullish trades. For now, only sell trades with the condition I've just mentioned till we are in the zone to take our counter buy trades. Here in Nemex, the price is still ranging and still in the area of value right here. A pullback below 50 EMA followed by bearish engulfing pattern. If that happens, we're going to take short or sell trades. If we have a bounce from this area, which is an area of value, if you have a bounce from here below 50 EMA and the price forms bearish engulfer, I'm going to go short again and keep on taking my sell trade till I see a condition to enter sell trade. Remember, the next buy trade will be only if you have a dramatic push up above 50 EMA with a good momentum. For now, only looking for sell trade after the bounce with a bearish engulfing pattern. The next zone for the Nemex I'm going to mention in my next video if we broke below this zone, if you are trading on this platform. Next we have gold. Now it's pushing up nicely. If you have seen my yesterday's video, I've said that the gold has formed a little anchor and we have a good chance that the price will pull back and push up from here with this nice 382 candle above 50 and 20 EMA. We had a nice push up from here, and let me show you what I've said in my last video so that you can understand conditions and entries. At this point, we are now broken above with a good momentum. If we have a pullback, which is likely now to this anchor level, let me give you that as well, which is right here. Price can likely use this level to push further higher. Nice one. So we did not get any bullish condition. If you are wondering if this is a valid bullish engulfing pattern, no, it is a valid bullish engulfing pattern, but not one of my valid bullish engulfing entry. The way I take my bullish pullback trades with the 6 rules, and one of the rule is not met here. That is why price still pushed up, but as mentioned yesterday, this is an anchor level from where generally we can get a possible push up. And looking at this 382 bullish candle, there was a chance, a good chance, a likelihood that price will push up, and it has pushed up now, heading towards a major level of resistance, which is 20.70.85. that goes up to 20.77.04, from where we're going to enter our sell trade with bearish engulfers, double top, inverted hammers, 382 candle bearish. So these are conditions I'll be looking at now. Price just made a new high. If we get a pullback, a few red candles above 50 EMA followed by bullish engulfer, in that case I'm still going to go long till we are in the zone above in red. Exactly the same as gold, as mentioned in my yesterday's video, that we have an anchor level and price is now pushing up. We had a push down to the level of support, and now price is pushing up from there. Now once we are again broken above this high, that is very important. Once that happens, we're going to start to look for the pullback entry bullish with a pullback of few red candles followed by bullish engulfer, and keep on taking longs till we are in the zone above in red, which is 24.26. that goes up to 24.66, from where we're going to enter our sell trade with conditions like bearish engulfers or double top entry condition. Inverted hammers, 382 candle bearish is also one of my reasons to enter. So last one, we have crude oil. Price is pushing lower, and we had a valid bullish engulfing pattern right here that did not play out, and that would be a stop loss hit at this point. Now I got a question asked a lot if this was a valid bullish engulfer. Yes, that was a valid entry, but when I see a good volume, especially on commodities like this big candles, I don't normally enter my trade right here. I enter a few pips below or the half of this candle. In that case, that would be still a stop loss hit. As some of you know, that crude oil is not one of my favorite commodities to take my pullback entries. I mainly look for major areas or a chart patterns like double top, double bottoms, head and shoulder pattern for crude oil. That works very nicely, but these two entries wouldn't have been played out. Price is pushing lower, but we had an entry here from the area of value that was mentioned in my video that has played out nicely, and price is now pushing lower, broken below 50 and 20 EMA. Price is also forming a 382 candle. If this closes as a 382 candle, in that case we have a likely chance that price will now start to push lower. Now the next zone to take your buy trades, as price is now broken below 50 and 20 EMA. Now the candle is not closed yet. This daily candle, I need to see a close of that. Once we have that, prices will likely push lower to this level, which is 67.24. that goes up to 68.79, from where we're going to enter our buy trades with the conditions like bullish engulfers, double bottoms or hammer candles. For now, only looking for sell trades with conditions that can be a pullback of few candles followed by bearish engulfers, pullback entry bearish till we are in this zone below in green. For now, only looking for sell trades as long as we are getting a condition to take off a sell trade till we are in this zone for the counter buy trade. So these are conditions I'll be looking at for commodities. Hope you're getting value. If yes, hit a like button for me. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.